like, what is that one financial lesson that you believe everybody should take into 2026? Like the lesson from 2025 that you believe you should take into 2026?
I think we should be more proactive with our finances than reactive. One of the biggest problem in 25 was a lot of people were reacting to economic shocks rather than being proactive towards economic shocks. People were making plans or acting on their finances based on what's already on the news. If there's one thing I've learned in financial strategy is by the time it gets to the news, it's already too late to act. So those that are quite strategic with their finances, they are proactive and they have made plans ahead of anything that becomes news. Whether it is change of government, whether it is inflation, and all of that. So you want to be more proactive with your finances, and by that is having a proper plan, having a proper budget, having a consistent percentage, not amount. Let's be clear about that. A consistent percentage that goes into your savings, and for those that can afford it, a consistent percentage that goes into your investments. Again, being proactive means that you have to break down big expenditure like rent, school fees, and things into monthly contributions, which is one of the things we teach and practice at SUBA Capital. For example, your rent is going to expire. That one is not supposed to be a surprise, but unfortunately, in 2025, people still get stranded with paying their rent because they were not proactive with it. School fees, September is going to happen, right? Whether we like it or not, September is going to come, except you want your child September, and September is like the most expensive time of school year. So you want to be proactive with planning and preparing for those times. The third one is being proactive with how much you earn. So some people will say, oh, Silas, but it's not realistic with the amount of money I earn. Well, yes, that is if you earn single source of income. That is if your income is solely dependent on what other people give you, right? Like your employer, or if you are a contractor or a freelancer, like your clients, as the case may be. So if you start to become proactive about your income, start to become proactive, and take that into 2026, you kind of have a more stable financial year, right, as compared to what you've had in 2025.
Okay, thank you. Thank you very much for that. I like that
Can you still hear me clearly?
Yes, I can. Um, I like that you spoke about being proactive, right? So, I think our second panelist is here, Chijindu. I have a question for you.
Yeah.
So, still looking at from the point of being reflective, what investment behavior behavior do you believe dominated in 2025, and how should people adjust heading into 2026? This question is for you, Mr. Chijindu. What investment behavior dominated in 2025, and how should people readjust heading into the new year?
All right. Good evening, everyone.
Good evening.
So, for me, thank you for having me once again on SUBA Capital. I really appreciate it. Well, for me, I took a look at 2025, and it's just some basic behaviors, and they just spread into different tech tackles, or let's say they just masqueraded in other different names. So the basic things about human behavior with regards to investment are just two: fear and greed. So that is like what basically moves human beings, or what moves human beings with respect to investment. For greed, it masqueraded itself this year as trying to get a way out of hardship. All right, so many people did some things. So many people took investment decisions this year, majorly as a way of getting out of hardship or getting an extra source of income. So basically saying people wanted more. All right, so we saw that with the Ponzi schemes that came out again this year. We had the likes of CBEX and all the other ones that may be too numerous to mention within this short time. Many people who did that barely had knowledge about it. Many people who did that barely had interest. All they just wanted, or the most common thing amongst everybody who engaged in that, was greed first. So they just wanted something that would give them an extra source of income outside what they already have, so that they can get a lifeline out of the hardship, because the inflation hit hard, and then several other policies like removal of subsidy and every other thing started hitting really hard. I think sometime late last year. So many people were trying to make better decisions this year, and in trying to do so, they fell into those schemes. Now, I'm not saying that greed is bad. Maybe at the end of my contribution, I would make a balance of it. The second part is fear. So greed is one part. The second part is fear. Now, most people made investment decisions this year based on fear, and it's largely because they wanted to avoid what they were seeing on the news. So they saw a lot of many negative news coming out of the news, and then they just wanted a way out of it. So they made some investment decisions out of fear. Now, I usually tell people whenever I'm taking a class on investment is that you need a good portion of greed and a good portion of fear to be able to make good investment decisions. You need a balance of both. Why I say so is because greed is the element that would make you want to go for more. And if you don't have that, you feel very complacent. You feel very, very okay with anything that is average. So greed is what would make an $100 still be heavily invested in Nigerian securities and stocks. Greed is what would make a Dangote still want to expand his petroleum refinery and also be looking into going into steel. Greed is what would make BOA to also be eyeing an expansion into petroleum. So greed is what moves the market. People want to get more than they currently have, which is good in a way, but then it has to be balanced, because too much of it now leads you to making very bad decisions, and very little of it makes you to be very complacent. So you need a good portion of greed that is complemented with a good portion of fear, because fear is what would make you to protect what you already have. If you are not fearful, then you just keep being greedy and you may end up losing all you have. But fear would help you protect what you have. And if you're too fearful, you would not want to go out of your way to get what you really want. So you need the amount of fear that will help you protect what you have, and you need a decent amount of greed that would make you go for what you really want. So this is the balance that I thought to bring to this. And then heading into 2026, everyone should understand their greed level and their fear level, because your level of tolerance is going to be different from someone else's. So someone who is coming from wealth, someone who is coming from an investment background, say maybe the child of an investment banker, the level of risk tolerance might be way higher than someone who is coming from lack. So everyone going into 2026 should understand their greed level and their fear level. It could be based on your background, it could be based on your education, it could be based on your exposure, but you need to understand what level of greed you should have and what level of fear you should have. and also based on your income, because someone who is earning 5 million a year, or 5 million a year compared to someone else who's earning 5 million a month, their risk level might differ a little. Okay, so you need to understand that, because someone who's earning 5 million a year can decide to invest 1 million every month, and then you'll not be able to make good. Someone who's earning 5 million a month rather, and decide to invest 1 million every month, and whether it goes good or bad, he knows that overall the good ones will be way better than the bad ones, and then he can make good decisions. He can hire a financial advisor. He can also take more opportunities when they avail themselves, compared to someone who is earning 5 million a year. So that person might be limited in getting more knowledge, might be limited in getting more opportunities. So you should know your own level, and then find a level playing field for your own level. Get the information you can get, or the level of knowledge you can get at that level. Look for people who are around that level, who are doing similar thing to what you're doing, and then you should be able to get a balance of these things. But most, to summarize my points on this question, understand greed, understand fear, understand your own risk tolerance level, and then be willing to be exposed to it. This should help everyone moving into the next year. Thank you.
Okay, thank you very much, Chijindu. I love how you try to balance it. You are not saying we should not be greedy. You are not saying we should not have fear, but as an individual who's looking to go into investment, you should bring a balance, and that is what is very essential. So, moving over to Mr. Silas, based on what both of you have said, my next question to you would be about rebuilding. Now, for someone who maybe, let's say, over the course of 2025, he lost a lot of money due to bad investments, due to Ponzi scheme, how would you advise someone who wants to rebuild or strengthen their financial structure in 2026? Like, how should the person begin?
1,000 naira, spend 200 naira in education, and then invest 800 naira. Now, do that for 10,000, do that for 100,000, do that for 1 million. It's about the same thing. So the 80-20 principle will always win when you put it into practice properly. So I would say people should invest more in education in 2026 if they want to rebuild. Invest more in learning, invest more in patience, right? Because the more you know about the market, the more you know about what, the more patient you are. So that's when you learn and understand that like planting flower, planting a seed in the ground, you have to be patient for it to mature. With us, but the few that agree with us are going to win in the markets. That's my take on that.
Okay, thank you very much. I do apologize. The network is somewhat distorted, so I keep going off and on. I like your points that you noted about starting off from financial literacy. There's this thing I always used to tell myself, that what you don't know is always bigger than you. So the best step to start off is to educate yourself. So, Mr. Chijindu, my next question will be directed to you. Please confirm if you can hear me. All right. So, Mr. Chijindu, what investment habits should everyone adopt heading into 2026? What habit do you strongly advise everyone to adopt in the coming year?
All right. So, also linking it up to what Mr. Silas mentioned earlier, first I would say invest in yourself. Moving into 2026, I would advise everyone to do this heavily. By investing in yourself, you're going to be investing in buying books, taking courses, watching videos, reading materials, news articles, and news releases. Listening to podcasts. There are quite a couple of them that are very, very educative that would help you understand investments generally and understand money also. So you should be willing to learn from the others who have moved ahead. So investing in yourself from getting knowledge cannot be overemphasized. So I would advise anyone who is listening or who cares to listen to first invest in yourself, because even if you are stripped of, if you invest in yourself, even if you are stripped of every material thing you have, because you're able to get those things based on through what you already have inside of you, you can do it over and over again. I've heard a couple of people who have boasted that if you take away everything they have, they would get it back within a shorter period of time, because what's produced those results is inside of them. And during the process of producing that result, they learned a whole lot. So you should be willing to invest in yourself so that you would have that as your biggest achievement. Then the second thing I would advise is to invest in relationships, both direct and indirect relationships. By direct relationship, investing in trying to understand, investing in people, investing in organizations like SUBA Capital, getting to know what they do, attending their program. That is like an investment into a relationship, both directly and indirectly. Getting to know people who are very, very financially literate, getting to know them personally, or getting to know them indirectly by following up with the content they put up, whether it's in text format, in graphic format, or in video format, or in audio format. Getting to know them and understand how they think and how they approach investment. You should be willing to invest in relationships. Then lastly, you should be willing to take risk. Some people are very fearful, and some investors have their own school of thought that when everybody is fearful, that is when you should be courageous. And when everybody is courageous, then you should be fearful. And oftentimes plays out in the market. There are some opportunities or some great investment opportunities that have been opened to the market, but because people were fearful, only a few took it and then it paid off. By the time everyone has now seen the first set of people that were paid off, they are now rushing to go in and they end up getting burned. So at the end of the day, so it's best to be open to taking risks. So if you have invested in yourself and you've gotten knowledge, you invest in relationships, and then you have people who you can ask for advice. Like you have SUBA Capital, maybe you know one or two other persons who are heavily into financial investments. Then you can now take the risk. So you know it's inside of you, and then you have people who you can ask for advice. Then you should be willing to take the risk. Sometimes it may not be very clear at the beginning. I remember a couple of years ago when I wanted to buy my first stock, I decided I was going to use a very little amount of money. So I asked them for the minimum, so that if I would make any mistake, I'll make those mistakes on a little amount of money, and then I'll learn my lesson early, instead of making those mistakes when I use a lot of money to do it. So you can start small, and then with the intention of growing it to something substantial. So you can take the risk even without clarity, because sometimes the clarity you're looking for is found in the process. So just take the step to start. And I believe these things would help you make better financial decisions.
Okay. Thank you very much for that. I like how you said about one habit. You said it, Mr. Silas said it. It all boils down to yourself. If you invest in yourself, no matter what you face, no matter how turbulent or how challenging the times may turn out, because you have invested in yourself, you can be able to adapt. So I would like to call up our third panelist who just came in, Miss Adaku. So Ms. Adaku, I'll be throwing one question to you, and then in the next 2 minutes, if you can just give us a quick answer. What are the so looking at personal finance? So Ms. Adaku, what are the 3 personal financial rules everyone should follow in 2026? Because I know you are someone who is very strong in terms of personal and business finance. So what are the 3 financial rules you would advise everyone to adopt in 2026?
Okay, so thank you very much. So the three rules that everyone should adopt in 2026 as a person who is committed to financial freedom, financial mobility, and independence. The first thing you want to do is ensure you find a way to increase your income, because whether or not we like it, inflation is eating at your money every day. And one of the top reasons why so many people cannot exactly save is because they make barely enough to meet their basic needs. Then number 2 is to automate your savings. Automate your savings means that when your savings or your whatever fund comes into your account, it should be automated that your savings leaves your personal account to your savings account. The essence of doing this is to take away the actions and the many thoughts and fights within yourself to ensure that you are saving. And then number 3 is to invest in personal development. I think I should have started with personal development, because the whole essence of personal development is, if you do not develop yourself, you will not be able to make more, one, and you will not be able to save. It is self-development that makes you to understand that saving is not a luxury. Saving is not something you leave for tomorrow, but saving is actually preparing you for that future that you have always dreamt about.
Right. Thank you. Thank you very much, Mr. Adaku. I like how you mentioned the 3 steps: automate savings, personal development, and our time is quite fast spent. So I'll just throw a last general question, right? We cannot talk about financial literacy, we cannot talk about adopting new strategies without talking about discipline. So the question I want to throw, like, what are some practical steps that any individual can adopt to be able to encourage financial discipline? Because without financial discipline, it will be very challenging to, grow your finance. So I think in the next 60 seconds, Mr. Silas, if you can just help us with that, practical steps that one can use to encourage financial discipline.
I think Adaku just mentioned that just a few minutes ago. It's paying yourself first, automating that. Thank God for technology and all of the softwares and everything we have. You can automate that savings or that investment to leave your account immediately, or on a particular day, right? And do that consistently. Don't go back and cancel the direct debit order or standing order you've put on your account, right? That way you are instilling the discipline not to be able to default on your savings or your investment plan. And also lock it. I think I mostly tell people that to a large extent what we have is withdrawal account. We don't have savings account. Mm-hmm. Lock it. You don't have access to it. The idea is to save it. Lock it, leave it alone. Thank you.
All right. Thank you very much, Mr. Silas. I still have a lot of questions, but we have run out of time. So I know most of the persons who will be listening to this might have some questions they want to share. So what we will do is you can just simply go to our social media, write your question, tag at SUBA Capital, and from our end, we'll tag any of the panelists to respond to your questions. So if you have questions about personal finance, financial strategy, investment, financial discipline that you want to develop yourself in the coming year, you can just go to any of our social medias at SUBA Capital. So that's same for LinkedIn, Instagram, Facebook, and then X. So thank you very much. Thank you very much to our panelists, Mr. Silas, Ozoya, Ms. Adaku, Ekwueme, and Chijindu Atusiuba, for gracing us with your presence We do really appreciate it. So I'll just give you guys the next 30 seconds to just give us a farewell speech and your goodbye comment in 30 seconds. I'll start with Ms. Adaku.
Okay, so my goodbye to you is, as we are going into 2026, 2025 has been eventful. We have had so many wins and a couple of losses. I want to say that you are not what your result is. Give yourself some graces. It is okay to start again. You have more knowledge now. Ensure that you don't just add them to your stash of knowledge, but make sure you're applying them. 2026 will be better. Yes.
Okay. Thank you very much. Chijindu, Mr. Chijindu, please, your farewell speech in next 30 seconds.
Okay. Mine basically would be to do your research. Cannot be overemphasized. We keep saying it over and over again. Whenever you see an investment opportunity, whether it is online or physical, always do your research. Try to find out what has happened previously and what can happen. So always do your research.
All right. Thank you very much. Trust yourself, pick yourself up and do your research. Mr. Silas?
I would say the money is for the action takers. So it's enough to be aspirational, have a lot of knowledge and know-how, but if you do not take action and execute on those knowledge, nothing is going to happen. So take action on everything you know, and then the money will come.
Thank you. If I want to put it all together, trust yourself, do your research, and take action. So thank you everyone for listening in to this session. We trust that the information, and also want to thank you all for being with us throughout the year, all through our financial literacy. We've learned, we've unlearned, and we are still relearning. So this recording will be put on our channel. If you are watching from our YouTube channel, you can drop your questions also in the comment section, and then we'll look for a way to get answers. So with that being said, we want to officially close the financial literacy webinar for the year, and we'll see you all again in 2026.